Yeah, I'm losing my
But
edge.
today we're going to be focusing on metals. And this is kind of a rhetorical title here. Is it time to buy metals? We're going to look at some of the price history we've seen across the precious metals complex over a long period of time or a short period of time, and maybe what we can do with some of that recent price action. So let's jump right into it.
Let's do it.
I love taking oops here. I think I got to adjust my screen a little bit. I love taking one of these further out views of an underlying product.
You're absolutely right. My context is there you go. Context is so important. I'm sure you get asked this all the time too. Well, what chart do you look at? Do you look at a 3 minute? Do you look at a 5 minute? You use the daily? And my answer is a little bit of everything. And what I mean is I'm not frenetically dialing through them, but I think it's important to not get caught in the weeds. In a 3 minute chart, if you're actively scalping, you may find it interesting. I think it's too small a time frame.
Yep.
If I go down, it would be to 15 minutes. But part of your daily setup should include a little bit of context. Looking a little bit further out, it will give you a little bit better perspective as to which way you want to lean and a little bit of context about both markets. So I agree with you. Going back, and I think we always make that argument, well, the market isn't like it was in 92. So why am I looking at that? That's not what this exercise is about. It's looking at a little bit of context around what the market has done. We're not going to base a trade out idea off of this, but this starts the process of truly looking at a little bit longer term extremes, which I think is incredibly interesting.
Yeah, I think it's not, we're not looking at 1988 to 2020 to say, all right, our holding time frame is 30 years or 40 years. It's not why we're
doing. You would be an old man then. Oh my God, think about that.
I'm never going to get old. I'm a little kid. You sacrifice an hour of sleep for an hour for running, stay young forever. But it is interesting to note where we are in precious metals. I mean, this is as far back as we can go. I think the futures data as far back as we can get. And we're, at basically all-time highs in gold and just below those highs in silver. But if we actually zoom in a little bit further and we're going to look at the last 12 months, we're coming off a bit from those highs. This is the small precious metals index, combination of gold, silver, and platinum. We're off almost 15% from those highs we just saw in early August, which it may conflict your opinion. Okay, we're at the highs. Maybe I should sell, but we've just seen 15% sell off. Maybe I should buy. What do you do in this context? How do you set your frame of reference? How do you decide your directional assumption?
I love that walkthrough. And you've taken, and what you taught, Mike is a very advanced professional. It was a professional trader. So he, not in a bad way, but his mind works so fast that he discounted or didn't mention the fact that a 15% move is of interest. He went right to the question that every trader should ask. Do I want to play the short-term extreme, or do I want to look at the context that this could easily drift back into the middle of the range, which would be between 60 and 65. So you're absolutely right. This starts the discussion. There's enough movement here, unlike we've talked endlessly about. And I feel like in the previous segment, I walked through 3 minutes of Treasury saying the exact 5 things. No movement in the underlyings, no movement in the yield curve, no premium to sell, move on. And this 15% is the start of the discussion. So it's great that this is what you want to look for is two-sided moves of a material complex, a material amount, excuse me.
And we can look in a new lens as well. I actually took a chance to plot the implied volatility indexes for both gold and silver. So this is GVZ and VXSLV. And it looks like the market's not pricing in these products quieting down anytime soon. You look at those implied volatility levels, which are the expectations of movement. We're not sitting on those lows like we were in January. We're actually kind of middle of the range, not quite at those highs, but I think there's still an expectation of further volatility, especially going into an election year. We've seen some equity sell off. We've seen a lot of dollar strength. I think participants are looking at precious metals in particular as a a hedge. I don't know, that relationship is almost broken down between gold being a hedge and against equities. What is your take on that? Gold moving from what has traditionally been a negatively correlated asset to almost positive or neutral against equities.
It has, whether they call it flight to quality, and then it's risk off. Uh, you know, the move from 18 to $30 was dramatic in silver. And
Yeah.
I think it caught everyone off guard because if you look at this, if you had gone back, don't go back, Mike, but if you go back to the price point, a $10 move in silver, we've had lots of those, but we were lulled into 3 years of trading between 13.70 and $16. So that move was dramatic. This correction is dramatic. It's only I shouldn't say $8. $8. We talked about this. It seems like it's cheap underlying. It's painless. Not when you're trading 5,000 ounces of them in a regular silver contract versus 100 ounces of gold. I agree with you. I think this is still a rich environment. Right. We're not at that spike during the pandemic. I think what's interesting is the expansion of vol that we looked at in August was when we actually posted a high of $30 in silver. We've had a very dramatic fall. Vol is still very rich in here, but not at those peaks. But considering that since in the last, what have we had, 14 trading days in September, a 28 or 26% fall in anything is dramatic, or a 15% fall in SPRE is dramatic. So you're absolutely right. I think this speaks to two things, and I love the exercise of going through, looking at volatility. Now, we don't have options on our small exchange products yet. They're coming, and that will let us take advantage of that. But using this as a tool to determine opportunity, and this is always good context to look at.
Yeah, I think for those of you who aren't actively trading metals or you haven't explored them before, now is an opportune time to at least take a look and add it to your radar. If you're going through your equity portfolio and you're maybe looking for something that's a little different, that's definitely active, metals are a space that are worth considering. And regardless of your assumption, whether you think someone's at my door, that was a little bit unexpected.
That's the pizza I sent you, so no problem.
Oh, thank you.
Now, it's a double sausage. It's the meat lover pizza. No, it's Mike's a very healthy guy. He would never consume that. And honestly, right now, that sounds delicious to me. But
maybe it is Friday, it's pizza night. But regardless of your assumption, if you think this 15% sell-off is opportune for buying a dip, or if you think this is the real pullback from this 40-year extreme that we're seeing, it's really never been easier to try metals. And I don't usually look at contract spec sheets anymore. Your eyes almost glaze over a little bit, but Pete, you had a really funny story for me yesterday that we didn't get to during the show. We talked about afterwards in your experience moving from gold to silver. Do you mind sharing it?
Oh, yeah. So when we were actively making markets, we had our own set of servers, and they had to be set up by products. So we did arbitrage in treasuries and foreign exchange mostly. But when metals were moving, being trading junkies, we wanted to trade them. And I traded gold. I never thought about silver. It really wasn't at a prominence in terms of the volume that it was, but silver was starting to move. And I'm like, geez, let's add silver to the server. So we had our risk guys set it up. Now, big silver is $25 a tick. Now, the guy set it up, permissioned me and everything, but the risk manager made one mistake. Instead of putting $25 a tick in there, he put $2.50. So I'm trading 5 and 10 lots back and forth. I'm seeing my P&L swing, and net for the day, I lost $3,200. And I was like, that stinks. But you know what? In the scope of things that we were doing back then, not a big deal. Now, I just see the $3,200 loss. I don't get my statement or see the true P&L until the following day. Market picks up at 5 o'clock at night, and I am loving this movement in silver. So I'm banging it back and forth, and I made back what I thought was $2,800 of the $3,200 I lost. And I'm like, all right, good job. $400 wasn't too bad. When I get my statement in the morning, I see the mistake that it wasn't the risk manager's fault. He just was, moved a digit. But what I had actually lost that morning was not $3,200, but $32,000 trading silver. And luckily, I traded it the same way, so I made back $28,000. So I lost $4,000, which I consider incredibly fortunate because if I had known that I had tossed away 32 grand during the day, and the reason I only knew that was the statement comes out the following morning.
Yep.
So by that following morning, I knew what I had lost, and I also knew what I had made overnight, and I was able to multiply it by 10 and realize my mistake. But that was a classic case of not understanding or checking the contract specs. The risk manager missed it by a digit. So that happens all the time. I should have known that trading 5 and 10 lots in there and it moving 50 cents, 60 cents. I was exposing myself to that. But the complexity and the challenge just completely caught me off guard. I wasn't familiar. It was interesting. It was moving. I didn't do my homework, which is the takeaway from the story is not the swing, but for a lot of these products, you got to do your homework because they're all different tick sizes. They're all different things. If it was just, I knew that moving from gold to silver or moving to crude was $1 tick, that would have made everybody's life a lot easier.
Yeah, I think we've tried to reduce the barriers and the complexity. You spend a lot of time looking at these contract spec sheets and tried to simplify them a little bit here, but $10 a tick versus $25 a tick and daily movements of 2,000 versus 2,800. It can be a lot if you're just trying to trade a trend in an active market. So we tried to remove those barriers, $1 a tick for SPRE, $1 a tick for SFX, SF75, and sticks. So you can traverse all those asset classes and trade any market that's opportune for you. And hopefully that'll make it easier for everyone to participate. And I just wanted to show again, the opportunities in precious metals aren't just in silver or just in gold. I think when you combine gold, silver plus platinum, which tends to move a little bit more than actually both of those precious metals, you have a product that's exciting to look at. It's relatively cheap to participate and engage with, and you'll have exposure that you really can't get in the ETF world either.
Absolutely, and that 2 points that are great here. That $440 of capital required. If you're trading on an intraday basis at a lot of firms, you're trading on day trading margin rates. That's $110 to trade this. And the precious metals has had a movement of almost, I think, I want to go back and say, I've got to look at high to low here, but I think about 65 ticks or $65. Now, you think $65 isn't a lot. Well, you know what? As long as your losses and gains, you can always scale up that. And think about this, though. And this is important, 65 unique price points to trade. So
Yep.
yeah, you're scalping on a smaller scale, but you're scalping, unlike trading SLV or USO or something that gives you so few unique trades to trade between the day, and it's so expensive to do so. And I think this is a great takeaway chart because you know what? You want to look for an extreme. Each one gives you a slightly different one in terms of a percentage, but they're all extremes there that are interesting to trade. You're right. If you want to trade the short-term dip, the opportunity's there. If you want to look for a little bit of continuation of this pullback of metals, opportunities there. This is great. Volatility's higher, which means the amount of ticks we're going to see trading every day should be higher. Last little piece I want to mention is, we never talk about the platinum number in here. And it's a very small component of the index. And it's like, well, why did you chuckleheads put it in there if it's really not a tradable part of it? The reason is, guys, when options on futures come, platinum, while a small portion of the index, is by far the highest volatility metal we can trade. So we're going to look at a product here when we add options that with gold, with silver, which we always know has an appreciably higher volatility term structure, platinum higher than that. This is going to be a premium rich environment to trade. So it really makes sense to have all three of those precious metals in there in a holistic and simple fashion.
A lot to look forward to. And for those of you interested in trading SPRE or hopefully the options on those futures soon, definitely be sure to check out our subscription option as well. If you want to reduce your transaction fees and your market data fees for your whole life as a trader, definitely something to consider.